Today we're looking at the property market cycles and housing affordability. With me today is Enzo Raimondo from the Real Estate Institute of Victoria.
Hello, Karina.
Lachie Pitman from Aussie Home Loans.
Hello, Karina.
And Brad Teal from Brad Teal Real Estate.
Hi, Karina.
Today we're talking about housing affordability and the property market cycle. We hear all sorts of reports about how hard it is to get into the market. What's happening out there?
Well, there's a definite change in the market at the moment, Karina. We've seen a much more stable market in terms of property price growth. We've seen people sort of just taking a bit longer now to make a decision to purchase property. They've had the effects of 7 or 8 interest rate rises over the last 12 to 18 months, and that's pushed affordability over the limits. So
has that frightened people off? Are those interest rates frightening people?
Look, I think interest rates are one factor. There's obviously cost of living and confidence, what may be happening in other parts of the globe. I mean, people are still, I think, a bit concerned about 2008 and its effects, and whether there's going to be a similar type of economic downturn.
You mean the global financial crisis?
The global financial crisis, yes. But I think it's important to note that the Australian economy is linked to Asia and China more so than the US and Europe. So what happens in Europe and the US won't affect the Australian economy dramatically. I think the effects of the economy will be driven by China and Asia's demand.
Brad, employment's really important, isn't it? People's confidence about their jobs?
Yeah, confidence about having an income coming in, and people's ability to pay for a home is that affordability. And over the years we've seen it rise from about 28% of the household income to as high recently as 36% of the household income.
So does that mean that people are spending 36% of their wages paying their mortgage?
That's what financial institutions will avail people to spend of their weekly income.
Yeah, Lachie, you're the finance man today. What are you seeing out there?
Most people who can afford to buy a house will still buy a house. However, the banks are making it tougher to get the loan. Basically, they need a DNA to get a loan. The banks are looking at which way to make sure that people can afford to pay the loans back, but any good application is still going through.
So what makes a good application?
Well, as Brad touched on before, stability of employment. Yeah. Although a couple of the banks will look at if someone's on probation, as long as they've got a job, we still get a loan, but at the end of the day, they must be able to afford to pay back the loan on their own, not the banks have to foreclose on them.
Right. Do you still need a 20% deposit, or can you get by with a 10% deposit?
You can get away with a 10% deposit. In actual fact, some of the banks will lend to 95%, but you need 5% genuine savings. That means you must have saved the money over the last 3 months as a minimum. Most banks will lend to 90%, but there's a thing called mortgage insurance. That protects the bank, not the lender. A lot of people think it affects or helps the client out if they can't make the payment. That actual fact that it helps the lender.
In fact, that mortgage insurance is one of the great facts of the Australian financial institutions, because people are worried about what's happening around the world and regularly talk about, look what property prices have done in America. Now, America had a thing called non-recourse loans where people could just walk in and surrender their keys and no recourse back to the owner of the property, and the banks then had to wear the vacant property with no income. In Australia, there's that degree of discipline about repayment of your loan and the honour of and the commitment to repay your mortgage. And if people fail to repay, financial institutions have the fallback to have them insured. So there's not the cataclysmic event of the walk away from mortgages and the property values drop and no one can recover. So that's a really critical, very basic thing that's important in the property
Actually, Aussies
market.
have a really low default rate on their mortgages. Australian households, it's a priority, isn't it, for them to keep paying their mortgage every month?
Quite a bit under 1%. And as Brad mentioned, the United States, it's important also to understand that in the United States they were building houses to people who couldn't afford to buy them, while they had a vacancy rate of 12%. In Australia, or certainly in Victoria, our vacancy rate's been under 2% for the last 5 years. It's not improving. Yeah. So just that basic fundamental, and also the mortgage defaults in the US are around 7 or 8%. Well, they were pre-GFC. They're probably higher now. So, the American market is not going to be, you know, what's happened to the American market is not going to happen in Australia to the same degree. Look, if interest rates go up, people will be pushed to that mortgage stress level, and they may have to consider moving to a smaller home or selling their property, but it won't be in the proportions of the US. In fact, it'll just be part of the normal cycle.
But in all my time in banking, there hasn't been many people default, or they've defaulted, but they haven't lost a home. Either a family member will help out, they've got a second job, but most people have lost their houses. In my experience, are people who've used the house as collateral to a business venture which has failed, or supporting a family member. So the actual figures that people actually can't make their home repayment, sell the house, is minuscule, as you said before, but most of it's related to a business failure or matrimonial or something like that.
It's a basic Australian trait of backing yourself and having the confidence. And housing affordability is also a product of that ambition of where you want to be. And everybody aspires to live in a better suburb than what their pocket can actually afford. And so you hear someone with $500,000 wants to live in Glen Iris, well, they're going to struggle. And so is that their ambition is exceeding their capacity, or is it poor housing affordability? It's they'd like to live in a suburb that is unaffordable to them. Well, that's not poor housing affordability. They have to move out until they find the right level that suits. The people with regard to housing affordability I feel sorry for are the people who are living in an area and over time the rents rise and they are pushed out from where mum and dad might have gone to school and they can't afford to stay in an area because things are so expensive, and they have to move out and change schools and change train lines and kindergartens, and they're the people who are most affected by rising prices.
I think that whilst we're talking about affordability or unaffordability, which is a consequence of what the economy is doing, I mean, broadly the economy has been pretty strong in Australia. Most people, we got an unemployment rate of 4.2%. Which is the lowest in a long time. So whilst we have some unintended consequences of a strong market, which is affordability or you know, the ability to purchase property, you've got to take property long term. And for those people who enter the market now, I mean, the median price in Melbourne's trebled in a decade. So if you're fortunate enough to get into the market now, by the end of this decade, I think the same will occur. But at the moment, certainly in this year, from earlier in the year to probably September, I think we're going to see the market just in a very flat position.
And that's probably what the market needs. If you have a look at the trend over 2002 through to 2004, it was flat with 5% variations, and then it grew 2005, 2006, 2007. Flattened out and maybe came off a fraction with a GFC in 2008, 2009, grew in 2010, and it's grown for about the best part of 4 to 5 quarters. And now we need a period of stabilisation for people to build equity and almost go and improve your own asset instead of just relying on I'll buy it today for 500 and I'll sell it in 6 months for 600. It's easy money. No one has to work hard. No one has to think too much about that. And now if people have to consolidate and save and repay their mortgage and build equity in their home through that process, that's good for the property market long time.
I think the days of single buyer has gone as far as first home buyers, because the way the price of houses and their income, they can't afford to buy a house unless it's $250,000. So any younger person now, I believe, has to buy a house with a partner or a friend or something like that. That way the banks can show serviceability, and between the two of them they might have saved up the 5 or 10% deposit. Otherwise, they'll never be able to buy a house.
To break into the market.
Break into the market,
yeah.
Good pickup.
Oh, thanks very much, everybody.
Thank you.
Thank you.
Thank you.